It's official, the UK economy is in recession. Recession is defined as 2 consecutive quarters with negative growth. As the chart shows, quarters 3 and 4 of 2023 had negative growth. The fall in growth in the fourth quarter was actually quite bigger than expected. We might also point out that since Sunak came into power, UK growth performance has been dismal, and there's no prospect of a significant recovery on the horizon. Although this has generated a lot of news stories, many are describing it as a mild recession or a technical recession. Yes, it meets the definition, but it's not a very significant recession, they say. And there's an expectation that it won't continue. When we look back at the major recessions the UK has experienced in the post-war period, we can see that this recession is quite small, and there's no expectation that it will get any worse. That said, the actual impact of this negative growth in the second half of 2023 is bigger than the last chart implies. UK population has increased during this period, so GDP per person, which is perhaps a better indicator of what changes in GDP actually mean, has actually exhibited a more negative trend. Since the second quarter of 2022, there's been no growth in GDP per head, and it's fallen in 6 of the last 7 quarters. This looks like an economy that has totally run out of steam. There's just no real impetus to kickstart any kind of significant growth. Clearly, there are other countries that are currently doing as bad as the UK, Germany and France, for example. So there is a global economy element to this. However, the government's policies, years of austerity, have actually made this worse. UK economic policy is prioritising reducing inflation through high interest rates. The poor performance of the economy could be argued as showing that economic policy is working. High interest rates depress the economy, which means that inflation falls. UK economic policy is also focused on trying to reduce debt and taxes. This means that public spending, which has been starved of funds for more than a decade of austerity, will have to be reduced further. This is having a depressing effect on the economy, both in terms of the lack of public investment or any kind of government stimulus to the economy, and in terms of the general well-being of the country. Poverty, inequality, massive NHS waiting lists, crumbling public buildings such as schools and underfunded transport infrastructure. All of these things have a depressing effect on public mood and productivity. Just to see how bad UK economic growth is, we can look back over the past 15 years. The red dotted line shows where the economy would be if it had recovered back to a pre-COVID level of economic growth. The situation is actually worse than this if we go back to the 2008 financial crash. The pre-2008 trend is shown in light blue, and the dotted line shows where we might have been had the crash not happened. This dwarfs the growth shortfall of the previous chart for the post-COVID period, shown with the red dotted line here. So what is going to happen to GDP going forwards? The IMF is predicting UK growth of 0.6% in 2024 and 1.6% in 2025. The OECD is suggesting that looking at some of the most comparable countries, the UK is currently predicted to have the slowest growth in 2025, even worse than Germany, which is currently experiencing big economic problems. This OECD chart also shows the data for all other countries in the background. It can be seen that UK performance is at the bottom of the pile. There's no indication that the UK is going to have a prolonged recession. However, there is every indication that the UK economy is going to be below par for the foreseeable future. Looking back over 1949 to 2019, the average rate of GDP growth was 2.6%. There's no prospect of anything like this in the medium term. And we probably need more than that to start catching up, given that we've fallen behind where we could have been as a result of many years of austerity. Yes, COVID disrupted things, but we're just not recovering from COVID at the rate that a healthy economy should. As I said, current government intentions are to reduce taxes and by implication reduce public spending. We're not out of the woods with inflation yet, so interest rates will come down, but very gradually. This is why we're going to have modest growth for the next few years. The only way out of this is an ambitious recovery plan. Neoliberal economics and austerity has completely failed us. The market will not solve this problem. The only thing that the market does is to keep the rich rich. We need a big increase in government spending on public services and investment in UK manufacturing, particularly in renewable energy and technology sectors. The effectiveness of the US Inflation Reduction Act in, at least partially, adopting policies similar to these is an indication that a different approach would work. The US economy has recovered to its pre-COVID growth trend. For the UK, renewal can only be done by a dramatic increase in tax, but not income tax for ordinary people. Income tax shouldn't be increased. In fact, it would boost the economy if it was decreased. Where we should be increasing taxes on the massive wealth that exists in the UK. Some form of wealth tax, perhaps a land tax, could raise a significant amount of revenue, which would allow the country to invest in a plan of renewal. Sadly, the Labour Party looks like it's set to continue Tory policies of austerity. Even the modest £28 billion green investment pledge, which was at least a start, has now been watered down so much so as not to be any kind of commitment. We were promised Bidenomics on steroids and it's turned out to be a real damp squib. Our politicians are really letting us down. We need significant change now. Meanwhile, expect the economy to limp forwards into the future. I hope you found this information useful. Thanks for watching and I'll see you next time.